Welcome to the May 12th, 2025 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. Wow, what a week! There's a huge spike in the Dow. We were kind of in the depths of despair midweek. What is this? All of a sudden, a breakthrough trade agreement with the UK. And everybody'd say, oh, that's just a tiny island. No, actually, they're about 80% of the size of Germany. They're number 6 globally in GDP. And that was the first. People were hoping for India. But India increased their imports of U.S. oil by 67% in March. So those negotiations are apparently going extremely well. And what's happening this weekend? Trade negotiations with China in Switzerland. Clearly, the negotiators got to choose where they wanted to go, so hopefully they enjoy their summertime in Switzerland. Anyway, progress on trade agreements drives equity rallies based on this evidence right here. So, the Dow, year to date, we've got the history. This is the 2025 bear market. I'm going to give you some insights, and at the end, we're going to cover some allocation strategies. By the way, I'm Spencer McGowan, your financial weatherman and president, McGowanGroup Wealth Management, the team of 10, the team that cares. We serve affluent families right from the Crescent in Dallas, and we're really good at updating financial plans with coordination on tax planning and estate planning. All right, Dow goes from 45,000 all the way down to 36,600, almost 20%. The NASDAQ was worse. We'll cover that. Primarily, tech stocks drove the bear market of 2025. Is it over? Well, the title of the program today. Is it a raging bull market or is it a bear market recession and this is just a dead cat bounce? Could be, but I'm going to show you some things that are happening in the economy that are extremely encouraging. All right. So the Dow spikes on the trade news this week, now 41,500 essentially. Well, that says we're about almost 5,000 Dow points from the low, maybe 4,000 Dow points from the high. Well, we may trade in that range for a while because the disruptions from the tariffs is going to have some huge impacts. Pre-announcements of second quarter earnings will start to come out in June, and you may get a window for some bargains. What are those bargains? I'm going to cover the categories when we conclude the program on allocation strategy. All right, the NASDAQ is down 4% for the year. The Dow's down 3%. The NASDAQ went all the way to we'll call it 400 by the NASDAQ 100. It was 540. Well, that's like a 25% decline, peak to trough. That is an ugly bear market. And then right back up. Can we trade in this range? I think we may spend some time in this range, and the downdrafts clearly give us some great opportunities going forward. Why? Earnings growth, 12.3%. This is why you want to subscribe, because there's another detail that we cover almost every week here, and that is how much are earnings growing and what's the economy really doing? 12.3% earnings growth over last year reported for the first quarter. 4% for sales growth. That's a darn good equation for some bargains in the market from the right companies at the right price. And it also means the economy's healthy. First quarter GDP was a minus 0.3%. You do 2 quarters in a row, that's an official recession. And the tariffs provided the disruptions that could create that. But the Atlanta Fed says not so fast. 2.3%. The Atlanta Fed gathers all the information from around the country every week, and almost halfway through the second quarter, it says economic growth is pretty good at 2.3. In fact, Seeking Alpha went to the first quarter negative number, took the import function out, and the domestic economy was about a 3% growth rate. That's pretty healthy too. Wow. So this may create some bargains, and we're disrupting. These are the 4 asset categories, and you want these built into your plan because when your cash flow exceeds your expenses, then you're retired. And when it exceeds it by a lot, you benefit from every correction if you have a great strategy. Global lending, high cash flow. Safety and income, tactical safety, sometimes more than a fourth of the portfolio. Sometimes we use it all up for bargains and get pay raises. Growth with income. I've been talking about energy infrastructure. You take a look at oil right now, around $60, and you've got some great bargains with a lot of cash flow, especially pipelines, that'll pay you for the rest of your life, if you like. So the inflation numbers, well, that's a good hedge. Dividend companies, that's this category. We added one this week, and we added it because it was priced exactly as it was during the pandemic, and things aren't that bad from the last I heard. Growth and innovation. Yes, you want technology, but you want the right companies at the right price. That's what we do in McGowan Group portfolios. You can go to the McGowanGroup.com, set your time to meet with McGowan Group Wealth Management. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.